Hi guys, this is Sahil and I have updated my model a little bit and the video is about my new model. So part of it is in English, part of it is in Hindi, but I try to capture both the languages. Starting with talking about my model. So if you can go back to my videos, you can see I uploaded a video with a 70% hit rate model which was working very well and it still seems to work. Not even seems, it does work. But the issue with that model has always been that somewhere I had this gap in time, and with respect to order flow, I wasn't really confident with taking entries on that. And as I progressed, as I took the model, I did make it to a few payouts with that, and it did work very well, and it still does work very well. If you're new and you're using that model and you're making money, no need to change it. But I decided that there were a few things which I could work on, and I found something slightly better. Uh, about the hit rate remains the same. It is close to 70%. However, I have to account uh, for my personality, and my personality was somewhere where I wanted a fixed RR and not necessarily a fixed 1 is to 2 or 1 is to 1.5, somewhere in the middle. And this is what led to me over back testing and forward testing, and of course my original model helped me find something slightly better which is best suited for me, and it might be helpful to you. And that is what ICT is trying to teach you. ICT will never hand you out a model. It you use the concepts, you refine them over time, and with the help of that, you can find something which suits you the best. And as you progress, you will continue making you will continue making changes to the model, and that is all right. What you don't have need to do is switch your strategy completely. So take when I talk about my first model, it was based on FEG, order block, liquidity, time. Apart from this, I use nothing else. And so far, the concept is the same. I'm still using only these concepts. I don't use anything else. Apart from the way how I use them has changed a little bit. So let's get down to the model. It's very simple now, like much more simpler than I don't think anything else can be this simple. And it is back tested. I have forward tested it. I made it to a payout. Actually, I made it to two payouts with this model. Then I messed up the last $100 I tried to scalp it to get my money, and that led to a bad losing streak. But apart from that, yeah, so it works. Just trust me on this one. With this model, I look for the daily, the 4 hour, the 1 hour, the 15 minute, and the 5 minute. Uh, Sometimes the 3 minute, but you don't need to go lower than 5 minute, and you shouldn't even bother looking at one, two, or three if you're new with ICT, because you will get lost in the noise. So yeah, the first thing which I do when the market opens, and by open I mean it can be a half an hour before that. What I'll try to do is I'll look at the order flow. We are clearly respecting bearish order flow. Uh, we go down, we retrace to a fair value gap, we go down, we go back up, tap into a fair value gap, and we are continuing to go down further. Now, of course, some days it won't be so simple. Some days it might be choppy like this. And in such a scenario, I'll tell you what to do. Honestly, the best part about this model is that you won't get it. Uh, s- uh, it won't form 70% of the times. It won't genuinely form. You won't even find an entry with the 5 minute. Uh, if if it does not want to go to your target. Of course, 70% times, not it's not 100. So yeah, so for example, let's take the example of today, because today is like the picture perfect uh, what should I call it, setup which happened. And I was like, damn, I need to make a video on this because this has happened multiple times now. And I've been trading this model since when, 2 months back, and today is July, June, July, yeah. So before, like, it has been 2 months, and I have back tested it for 4 years. So, and 4 years is not enough. I know some people might say that, but trust me, it's working great for me. And so actually, I'm gonna cut some of it because I'm making the videos after so long that I don't really have anything scripted out. It's raw. So yeah, let's get down to the model. What you look for is a higher time PD array with respect to the order flow. Now, here's the thing. You might be confused at first that which fair value gap to mark. The best thing is mark both of them. I see this is what I do, right? Even right now, this is what I have been doing. And of course, I'm not saying that you won't take losses with this, or you won't mess up time to time. And what's next fair value gap? Right here. All right, you got the two fair value gaps, right? Now, of course, we can expect two things now. Price went down, tapped this, and it started moving up. So when you see this move happening, you won't really try to take a shot this day or even this day until it has tapped this. Once it taps this, that is when you expect shots. But when it was coming down here, this day I'll show you the trade, how it worked out. But for example, let's assume that you see price coming and it's going up. Now, how do you decide that should you stay bearish or bullish? That is what your 4 hour, your 1 hour, and your 15 minute will help you with. So, for example, let's go down to today. Let's go down to the 4 hour, the 4 hour structure. Now, the 4 hour is not telling me anything. That is what most people think, that because there are no fair value gaps. And this is what I thought at first when I saw price going just up, and I was like, we are really bullish. Will this be respected? Will this not be respected? I have no clue. But what do I see? Is liquidity. Where is liquidity being generated? If I take this and this entire thing till 6 a.m. actually, because this is where I usually start marking stuff up, and then I wait a little bit more. And I'm really sorry, that's my dog in the background. Um, and I mark the liquidity. Now I see this, and I see this liquidity stacking up in the off session. You see how it's 6 p.m. and this liquidity has been stacking up since Thursday and all throughout Fridays and Sunday. Why should the market leave this liquidity when it can just even if it has to go up, why would it give someone such easy longs? That is what was going inside my mind. And this concept, it is a bit of ICT and a bit of my friend Rudransh. He trades with me on my Discord, and he's a very good trader actually. So this is what he explained to me once about the all-time highs, that most of the times the all-time highs are formed not during the off session but during the NY session. If the rally occurs during Asian session or the London session, it tends to get taken out. So yeah, uh, that logic, it does make sense because ICT is time and price. Why would it give such easy longs? So when I saw at 6 a.m. price respected this and started going down. Of course, this is an indecision candle. I think that's what it's called. I really don't care about that stuff. What I wanted price to do was keep going down, and now here comes the interesting part. Now after I saw 4 hour, I dropped down to the 1 hour, and this is where I want to see the order flow start getting respected. So after this got tabbed, I just wanted to make sure what was taken, because the 1 hour is what gives me my order flow. In On the 4 hour, it's there's not enough information for my session since my trading time is limited, and I'll tell you how timing helps. Okay, this doesn't seem to go. I just do it like this. You see this liquidity sweep occurred. Now, once this liquidity sweep occurred, right here, this was I think around 8 a.m. Yes, and I saw this fair value gap. Which fair value gap got respected very close to my trading session. Now the thing is, I only trade between 9:30 a.m. to 11 or 12ish. Not more, not no further than that. I do not take trades after that. So that means I do not need to predict the whole day. I just need to predict the candles between 8, not even 8 actually, 9:30 to 11:30 p.m. And how why does this seem to work really good is that unknowingly you start following the order flow without actually needing to check for higher highs, higher lows, anything like that. I see a liquidity sweep. I see that this fair value gap was disrespected. This order block got respected, and again we start rejecting of this. I hope that does make sense. How should I put it in other words? I see price go up, but it goes up to do what? Take out this liquidity, respect this order block, and continue going down. Now at 9 a.m. you can see this thing almost this. You might get off guard, and you would expect, oh, all right. What if it goes and sweeps it back again? Well, this is where you will get saved, because after that your whole focus should be on the 15 minute. Market opens right around somewhere here, right? 9:30. Yeah, at 9:30 what I want to see is either this high gets taken out and displacement lower, or price displaces lower, but at the same time it gives a 15-minute fair value gap, or respects the nearest 15-minute fair value gap and follows it down. So in this scenario, do you see this 1 hour fair value gap which was formed right here? This was formed right here. This is a daily time frame. This has been used up in my mind. Like that this does exist, but it's not on my chart anymore because my analysis, now I'm focusing all the information post 9:30, except this one. So this has no use to me. This was only because nothing else existed there. So that thing has been used up. Keep that in mind. But it is still in my mind that okay, there is one more PD array which might protect me. What do I see on the 15-minute chart? Let's remove all of this so you can understand that why I was thinking that. All right. The liquidity sweep occurs right here. This was my fair value gap. I don't think you guys can see that, but it's all right. Just remember there's this liquidity sweep. It taps this. We keep going down. Now we not only create a new 15-minute fair value gap right here, right? And let me just mark it something like this, because this is like till what I will be trading it. And let me mark it as a 15-minute fair value gap. Now it forms a new 15-minute fair value gap. Now what do I expect it to do is tap this and go for this low. But I do not actually need my target to be so high, right? This is what, a good 30 points or something. Yep, 30, more than 30, almost 40. Yeah, I don't need such a huge target because my stop loss won't be that big. What I want price to do is tap this, create a 5 minute, then as soon as it taps this, I go down onto the 5 minute and I wanted to create one more fair value gap, and this will be my target. Either this will be my target or I will have a fixed 1:1.6. So I see this fair value gap has been formed. 9:30 manipulates lower. Now now time is of essence. All right, I want that 5 minute fair value gap to form after 9:50, not before that. If it forms before that, I do not take that trade. Now you might say it does work even if you do it before, but most of the time if the fair value gap is forming before 9:50, for example it forms right now, if it formed the 5 minute fair value gap right now, chances are that it would get disrespected on the 9:50 macro, 10:10 macro, because in those cases it happens to be a reversal, or it can either just disrespect it, grab some liquidity and keep going down. So let's see what happens. It price goes up, taps it again. Actually no, it taps it the first time, right? Because 15 minute हमें लग रहा था tap हुआ है, but it taps it right here. The macro kicks in. Now we just wait. There it goes. It takes out internal liquidity, keeps on going, and this is where it inverses this 5 minute fair value gap, and it creates this fair value gap. This one. Now we just wait. There it goes, creates one more fair value gap. You combine those two, and you once this fair value gap has been formed, this either you can put your stop loss on the body or the wick, or you can go for a hard stop. Now going for a hard stop is a good idea on days when there is no news, and there's and market isn't really moving a lot. So on such a date when my stop is like 8 points, I tend to just let it be 8 points because it doesn't really matter to me. And on NFPs and CPIs too, I just let it be. But yeah, you can go for a hard 5.25 point stop, and you can target 1:6, 1.6 actually. You can get higher targets, but that is if you want to sit through retracements. If you're willing to sit through retracements, go ahead, go for a 1:2. I'm not. I just want a 1:1.6, and how do I get it? If I put it right like this, and I just want a 1.16 right here, somewhere here, or right, somewhere there. I risk 1% to make 1.6%, and that is all right with me. Now I just wait. There it taps it. There it comes, and yeah, there it hits my target. Now you can see it does give 1:2, as I said. And now I will show you the interesting part. All right, this is what will open your eyes. Let me just put this a bit down. This is the most important part. All right, just look at this. All the time frames when put together, you had the 1 day fair value gap, which gave a downward reaction, created a 15-minute fair value gap. We we tap that, and we get the 5-minute fair value gap. That is your entry. You don't need to think. You just need to see these things: the 1 day, the 15-minute, and the 5-minute. Key factor being that you add time to it. Your entry should be post 9:50. This is all. This is all that makes me money now. Uh, Nothing else. You don't need to do anything else. You get like 2 or 3 trades a week. Actually, you get more sometimes. Sometimes you get it every day. Sometimes you won't. But on average, you could say you get 2 trades a week. Sometimes three, and that is decent. 2 days, 70% hit rate. 4 weeks, 8 days, rounded off to 10. You're getting 7 wins, 3 losses in a month. With 1:2, that's 14% up, 6% down. Still a lot of money. Yeah, 14% up, and do the math, 3, 11%. All right, that is way above. Add to your margin error, you will mess up trades. You're still good about making maybe 5 to 6%, and that is all you need. Trust me, 5 to 6% a month is you're better than 99% people. So yeah, this is all, and I want you guys to keep this thing in mind, that the day this all thing fits into one frame, right? Like today, can you see how the fair value gaps are aligning? This is a trade where you can genuinely risk way more. I did not, because today was no news Monday, which tend to be really bad. So when I saw this setup, I had to take it, but at the same time, I had to cut down on my risk, because that is what my rules state. No matter how good the setup looks on Monday, you should avoid it, or you should cut down your risk, because it can easily consolidate. But today was like genuinely really good. Now, how does this thing help me? This is what set my bias towards the downside. This is what confirmed it. If I did not have this in mind, chances are that I would be expecting price to keep going up. That I would start targeting this high. But this is what set my bias up. Uh, if you cannot see things like these, that is alright too. You can just make a rule that if something like this happens, you can see this, right? If even if you don't see this, you can see this. Just see post 9:50 a.m. which side did we create a fair value gap? Did we create a bullish or the bearish? If we created a bullish, if we created a bearish fair value gap, did we create it out of a 15-minute fair value gap? If yes, did we create that 15-minute fair value gap out of a 4 hour or a 1 day or a 1 hour fair value gap? If yes, that is your entry. You can take it for a fixed 1:1.6 or 1:2, as long as you have liquidity pending. That is all. That is all you need. You can work your way backward if you can't work it like how I'm doing it. Now, of course, this was just one single trade, and I don't want you guys to think that, oh, charge picture perfect data, so I'm going. That's the one I'm showing. I'll go back in time. Let's go back to. Let's go back to. Yeah, this was a shitty day. I'm going to show the shitty day actually. Yeah, this was. Let me just remove all of this. Let me show you the shitty day. This is where it's 6 p.m. I think I can go. No, that would give me 10, right? I don't need to see Uttara data. And this is 10 a.m., right? It tabs that. Now we go down into the 15-minute. Now the issue is gonna be here. It won't actually. You need to also remember that it won't have a 100% hit rate. The price goes, it keeps going, it keeps going, it keeps going. There's, you do tend to miss the trades. It taps it way later. But as I told you that we won't be trading post 12, and that is all right. We missed the trade here. But if you go into the 5 minute, right? Somewhere here, 9:10, post 9:50 m, what I said, post 9:50 m, where did we create the fair value gap? Oh, we created this, right? So can I take an entry here? That would be dumb. Alright, the main reason you won't take this entry is, first, we are delivering from a 1 day fair value gap, so this itself is invalidated. But at the same time, if you cannot see this, alright, for some reason you did not bother seeing that, let me just go do this, and you're like, okay, I can take this entry, this does make sense. Just go back to the 4 hour. Alright, we go back to the 4 hour. This hasn't formed, right? This candle, this entire thing hasn't formed. Where are we delivering from? Are we delivering from any 4 hour PD array? No, I cannot see anything which tells me that I should be expected the continuation. We are not delivering from any 4 hour. Go down to the 1 hour. There's nothing on the 1 hour telling me to go short. And what is this? Again, the nuances. This is again a bad trendline liquidity. This is not this. If you see this fall, this is not exactly the liquidity which would expect you to, for it to keep going up. Seeing this consolidation, you're 101% gonna go up. So why bother taking this short, right? You work your ways back. You get the idea that 950, you wait for the fair value gap, you get the fair value gap, then you see कि all right, ये तो किसी भी चीज़ से डिलीवर नहीं हो रहा है जो मुझे चाहिए था, so क्या पॉइंट है इसको लेने का? So you don't take this entry. What do you wait for? The 15-minute fair value gap. You don't have the patience for the 15-minute fair value gap. You shouldn't be trading if there is no 15-minute fair value gap. But for all the impatient ones, and this is what I do sometimes, but this comes out of anticipation. This does not come out because you know, you can actually create a model. You can, but you will need a lot of experience. So for example, this day, what did I do? There's something very interesting which happened. Where did it go? Okay, no, never mind, this wasn't the day. So some days I tend to ignore the 15-minute and I take the trade right off the 5-minute fair value gap. For example, if this forms after the daily, I'm ready to risk a little bit, like 1%, and I'll go for a 1:2 because the daily tends to work a lot better as long as it is post 950. But yeah, overall, this is my model, and I'm very sorry this video might be a little lengthy and at the same time very unorganized. I might have went off the main idea thoda sa zyada, but uh, seriously, I just sat down and I recorded it because that is what I wanted to do. I didn't want to script it. And well, let me just give you one more example for Tuesday, right? Tuesday might be good. Where is it? Yep, Tuesday is right here. Tuesday too, I think you would have missed the trade because the idea was right. Oh no, Tuesday you wouldn't have missed it if you were on a lower time frame. I think this was the day I caught it on 3 minute. No, never mind. You would have missed it. You would have missed it. But just to see the audio flow, this shit is interesting. All right, you had the audio block right here. 10 p.m. वाला था, हाँ 10 p.m. Yeah, right. This was the audio block. Price 10 a.m. को आता है. You go on to the 5-minute, and what do you see? 950 right here. 930 यहाँ जाता है, इसको tap करता है. Price starts going up. You get an entry, but like I said, just wait for it to you know, give you the entry. That don't just take this 5-minute fair value gap, wait for it to create a new one. If it does not, don't take the trade. Alright, and that is why I added the 15-minute confluence. Okay, if the 15-minute exists, why not use it? I see this getting tabbed, but after this I think my time वैसे भी खत्म हो गया होगा. But if it did hold, you can take the entry. Oh yes, I remember this day. This was the day. Sorry, yeah, this was the day when I missed the trade. Never mind. Yeah, I'm very sorry. I haven't read. I should have go check my journal. But yeah, so you see this day what happened. Price did exactly what it wanted to do. it went up, आया इस 15 मिनट वाले फेयर वैल्यू गैप पे जो इसको बनाया, respected it, starts going up, does not give us an entry, but trust me, it's all right. You will end up missing a few entries here and there. Always better than taking a loss. So I think, I hope you got the idea. I will summarize it. You wait for a you wait for a 1 day or a 4 hour PD array to get tabbed. That creates a 15-minute fair value gap. Once that creates the 15-minute fair value gap, you want it to be tabbed around your kill zone, so around 9:30 a.m., say 9:50 a.m. Yeah, post that you want it to tab that and create a 5-minute fair value gap post 9:50 a.m. That is the most important bit. You want that fair value gap to form post 9:50 a.m. and then you take the entry. Now, why do I say it post 9:50? Again, macro, and the thing that it ends up aligning with the silver bullet model. So you are getting a base hit rate of 50% just because of the silver bullet. These confluences are just adding a little bit to it, and there you have your model. So I hope this was a good video. I think it must have went well. And if you have any questions, if you want me to make this thing entire in Hindi, you can just I might just make it, or you can just DM me on Insta, or you can DM me on Discord, and I will explain this entire thing in Hindi. Uh, because I'm very bored and I love teaching, and it's like amazing. Like 2 or 3 people, they have been texting me, and they share their PNLs, their month to month. And there's this guy who showed that he had just like 2 losses in the entire month, and he took close to like 12 or 13 trades, uh, following the model. He got his account back from drawdown. Then there's this other guy, he's doing really well too. He uses the same model which I use. And then there's this guy Neuron. I'll link his YouTube too, or maybe he might just comment, and then you guys can check him out too. He started off with my model, I think, tweaked it a little bit, and he's doing very well too. So it's really good to see people, because that is how everything should work. If I give you the model, you figure out the nuances, you figure out what works for you. Oh, you might be like, okay, he gave me the model, he told me everything, I'm missing too many trades. What if I go on down to the 1 minute and find out an entry? Now, only do this going on down to the 1 minute. This is actually a bad example, but only do it if you have the experience. Because if once you go down to the 1 minute, you will see that how choppy price is. Not choppy, but how much noise there is. So, but it is again up to you. You need to realize your own journey and wo. Maybe I'm wrong, maybe 1 minute suits you, but it never worked for me. That is why I tell people, especially beginners, don't go down to the 1 minute. Stick to stick to 3, 5, 15, 1, 4 and day. उसके ज़्यादा don't go anywhere. So yeah, again sorry, ending की भी थोड़ी ज़्यादा लेंदी हो गई, but thank you guys for watching, and do check out my Instagram. And Apex is having a 80% sale right now. The code is Vedic. I'll add it somewhere. Maybe in my caption I'll add it. But yeah, go copy yourselves a few account. Thank you guys for watching.